If you're thinking the recession's coming, prices are going to come crashing, it's it's not going to happen. No! Interest rates, they're rising. Yes, they are. Can you afford a home right now? Well, they are rapidly approaching 5%.
Oh, boy.
I know. People are freaking out. They're thinking their payments are going to be like thousands of dollars more a month. They're not. I'm going to break this down for you today. I'm going to show you how much more you're paying now versus if you were to buy a house back in January, and going to talk about this a little bit and give you some ideas of what you should do to kind of wrap your head around this whole thought of not only do we have prices rising, but now we have interest rates rising. So let's get started. If you're one of those buyers who have been struggling to buy a house, you've lost it on bidding wars, or if you're one of those people who've just been sitting this out thinking, oh, the market's going to crash and the prices are coming down, sorry that now everything is increased. Not only prices have risen, but now interest rates as of today, Monday, April 4th, they are at 4.87%. I know it sucks. It sucks. I'm so sorry, especially for those of you who have been trying to get a house right now and it's nearly impossible.
Damn.
Well, I wanted to just ease concerns here. I want to actually break it down to you what your monthly payment would look like now versus what it would have looked like back in January if you bought a house. I'm not going to go back a year because those rates were like below 3%. And I think people would get really depressed by that. I'm not going to do that to you. No, let's just go back to January of 2022 to show you how much the payment has increased. And I'm going to talk about this a little bit about what we can expect and what you can do to prepare for this and kind of help wrap your head around this whole concept now that interest rates are going back up.
Oh my God. You have no idea what a huge relief that is.
So let's get into this. So what I did pull up a mortgage calculator. You could do this online. You can find a mortgage calculator pretty much anywhere to get an estimate. Now, this isn't exact numbers. This is an estimate of what your payments would be. Okay. Now, what I did is I took an average price of $500,000 here in Bergen County. That's pretty much what homes have been selling for. That's the average price right now. Now, if we do a down payment of 20%, that's $100,000. So this is real simple for you. So you have a $100,000 down payment. Your length of your loan is 30 years. Your interest rate is 4.87%. That's the interest rate as of today, Monday, April 4th. So your principal and interest will be $2,115. Your homeowners insurance is $66 a month. Property tax, it's $833 a month. What I did here is I took an average of about $10,000 a year in property taxes. That's about, give or take. Some towns a little higher, some towns a little less. I figured 10,000 was a good round number to use. So with your principal and interest, insurance and taxes, your monthly payment right now on a $500,000 home would be $3,014. I know it sounds like a lot. It does. Now, let's compare back to January. So January of this year, interest rates, I pulled up a number, it was 3.77% around mid to end January. Let's take a look at what the difference is. So back in January, your monthly payment, principal, interest, taxes, and insurance would have been $2,756. Okay, so compared to January to now, beginning of April, those payments have risen $258 a month. And spread that over 1 year, you're looking at $3,096 or about $3,100 a year. So it's not terrible. Okay, they increased $258 per month. Some people, that could be a lot of money, and I understand that. That can mean a lot for some people. So that's why they say every time interest rates go up a percentage point, the buyers lose buying power by $10,000. Okay, so now you're probably going to have to look at lower priced homes to keep that payment the same. You're going to have to drop your price point by about $10,000. Now, for those of you who are thinking, oh my God, I can't fathom the idea. Now I'm going to pay these higher interest rates. I could have bought back in January had there been a home available, or if I hadn't lost that bidding war, I could have locked in at 3.77%, or kept it under 4%. Let's step back a minute.
Okay. Go.
Okay. I've talked to a few lenders and they're all saying the same thing. The prices are going to continue to rise no matter what. Okay. If you're thinking the recession's coming, prices are going to come crashing, it's not going to happen.
That joke was much better in my head.
Unless we have a big economic fallout like we did in 2008, you've heard me say it before, they're gonna continue to rise. It's inevitable. Are they gonna continue to rise like they did in the past 2 years? I don't think we're gonna see that again. If you watched my market update for New Jersey, I just did that video last week, then you know that prices rose 8.5% in the month of February in the entire state of New Jersey. So they rose, but we're only in single digits right now. So what does this mean? Now you have rising interest rates, rising prices. What do we do? Can we afford to buy now? Should we be buying now? In one word, yes. If you can do it, you can find a house right now. I would still consider purchasing a home now, even the rates are just below 5%, even if they go up to 5%, because here is why. The home prices are going to continue to go up, right? But if your interest rates are rising, when we do come into a recession, and I'm saying when, it's going to happen. We are long overdue for this. Long overdue for a recession. What happens is in a recession, the mortgage rates will come back down. Then what do? You're going to refinance. So you'll refinance at that time. The rates are coming back down to bring those mortgage payments lower. So that's how you're going to have to look at it right now, guys. If you need to buy and you're just freaking out over these interest rates, just know eventually you can refinance that. We did it. My husband and I did it. We bought back in the late 90s and rates were back then were like 6%. And then they came lower to like, I think maybe just under 5% several years later. And we were able to refinance. It will come down. The rates will come down. Your home prices, they're not. So again, just go in with that mindset because people get stuck on rates. They get stuck on the interest rates and I get it.
Okay.
But if you go in with that mindset and you have to buy a house, just know that right now, this is what I'm paying right now. But in the near future, when the rates do come back down, I can refinance that and bring the payments lower. Now, another thing you can do, if you have time, you have all the time in the world and you want to just sit it out and wait and that a house will come up or you're going to have to wait because you can't find a house. What I would do, and I've been saying this a lot, try to save as much money as you can to put more down on that house. So the more money you put down, the less you're going to have to finance, and that'll keep your mortgage payments lower as well. I highly recommend doing that. So let's take a look here. So say if we increased your down payment to 30% at the rate, let's keep it the same rate right now, 4.87%. Your total monthly payment is going to be $27.50. All right. So that's a $250 savings per month. Should you be put another 10% down on the house? All right. That's just another thing that you can do if you have the time, you're not in a hurry, just sock away as much money as you can to put down on the home. Look, I know the market is really tough out there. I'm working with a lot of buyers right now and we keep getting outbid. There's nothing for sale. It's so hard. It is so hard. And I feel for all of you. I really do. This is something we've never seen before. And my hope is that it will get better. I'm the eternal optimist, as you all know. And I think it will turn around. I'm hoping this year it will get better. But you know what? This market changes on a dime. So we don't know.
I totally agree.
Just hang in there. It'll happen. And just know that these rates, even though they're this high right now, and they are going to go higher. They are. Try to keep that in your head that you can always refinance in the future because the rates aren't going to stay high forever. The prices, however, will continue to go up. So don't be sitting on the sidelines waiting for those prices to come down because I hate to tell you, it's not happening, guys. It's not. Sorry. All right. I hope you found this really helpful today. If you have any comments, concerns, just drop them down below. I'd love to hear from you guys. If you have any questions, feel free to reach out to me. All my contact information is down in that description box. Thank you so much for watching me today. I'm Jackie Baker with Coldwell Banker Realty, and I will see you next time.